We've reached the final piece of our 7 key metrics puzzle, and this one is all about knowing when the market is running on fumes. Picture a runner pushing themselves to their limit, sprinting faster and faster. But just as they're about to cross the finish line, they stumble, gasping for air, completely spent. That stumble? That's exhaustion. But before we go into the mechanics of exhaustion, let's clear up a potential source of confusion. Exhaustion, as we're discussing it here, is not the same as climactic action, which we explored earlier. Climactic action often leads to a period of accumulation or distribution before a reversal takes place. Exhaustion, on the other hand, typically results in an instant reversal, a sharp, decisive turning point in the market. Now, let's look into this principle in more detail. In trading, exhaustion is where the market's trend starts to fall apart, its last gasp before reversing. And when it comes to identifying exhaustion, 2 of the most powerful patterns you'll encounter are the shakeout and the upthrust. The shakeout occurs in a downtrend. Picture the market taking one final nosedive to scare off weak hands and grab liquidity. Smart money uses this move to scoop up cheap assets before driving prices higher. Now, upthrust is the inverse of the shakeout. In an uptrend, the market spikes aggressively higher, luring in buyers at elevated prices before smart money dumps their holdings and sends the market tumbling. Both patterns act as traps. Retail traders fall for the bait, whether it's a breakout to the downside or upside, only to find themselves on the wrong side of the move. These traps mark the exhaustion of aggressive buying or selling, signaling a major shift in market direction. Volume spread analysis gives us the tools to spot these exhaustion points. Both shakeouts and upthrusts tend to occur on high volume and large spreads, wide range bars. But here's the kicker: the effort doesn't match the result. For example, a shakeout might show a massive red candle with huge volume, but the price barely closes below its low or reverses soon after. This indicates absorption. Smart money is buying into the sell-off. An upthrust might have an explosive green candle on high volume, but the price struggles to hold its gains and closes near its low. This signals smart money is selling into the rally. The market looks strong on the surface, but under the hood, smart money is setting the stage for the next major move, usually in the opposite direction. Here's where we level up. While traditional candlesticks can help you spot shakeouts and upthrusts, Renko charts give you a cleaner, noise-free view of the market. With Renko, you're not distracted by every tick. Only the meaningful moves stand out. Now, pair this with the cluster statistics indicator and you start seeing a whole new level of precision. Look at the delta, the difference between buying and selling activity at the tails of Renko candles. A strong delta at the bottom of a shakeout or the top of an upthrust tells you who dominated that move, buyers or sellers. Using the min delta and max delta, you can pinpoint whether aggressive orders are concentrated at the extremes of the candle. This confirms whether smart money is stepping in to absorb the trend's final push. By combining Renko charts and cluster statistics, you can spot these exhaustion points with laser accuracy. It's like having X-ray vision into the market's inner workings. These exhaustion patterns often align with critical moments in the Wyckoff framework. Shakeouts typically occur in phase C of accumulation, while upthrusts appear in phase C of distribution. In both cases, they mark the final showdown between smart money and the rest of the market before the trend shifts into markup or markdown. However, in some cases, you can find them in phase D at the last point of support during a markup or at the last point of supply in a markdown. Here's the bottom line: shakeouts and upthrust are more than just patterns. They're signposts of smart money's activity. When you identify these moments of exhaustion, you're not just guessing, you're aligning yourself with the market's most powerful players. And when you combine this knowledge with the other metrics we've covered, you gain an edge that most traders don't have.